Is Ethereum set to pump or to dump? We're going to look through some key factors inside the crypto market to help you answer that question and also to make you aware of just how volatile crypto is. Let's run the numbers. When people get into the crypto market, they're just astounded by the volatility. You can see here, we're just looking at Bitcoin's price action. Up 55%, down 23%, up nearly 60, down a little over 20, up nearly 30, down over 20%, up nearly 100, down around 22%. Up nearly 100% and down around 23%. We'll zoom in here in a minute, but the first thing that I want to just help you to recognize, crypto is incredibly volatile. It's always up and down. Remember how the Bitcoin ETFs were approved. What happened next? Bitcoin came down literally 21.5%. And when the Bitcoin spot ETF started to trade, that's where we got all of that positive price momentum. As investors or traders, it's very important that you scale in and out of positions. For example, after the Bitcoin spot ETF started to get going, it went up literally 91.65%. That was followed by a 23.44% decline, followed by a near 30% rally, and then an 11% decline. And now we find ourselves right here. We're currently seeing a degree of weakness inside Bitcoin and the crypto market. We've seen a couple of cut unders here, which is just basically the sellers putting excess sell pressure into the crypto ecosystem. We were looking for a bit of a spike as the SEC ran with its tail between its legs in the past 24 hours because it dropped the Ethereum lawsuit. ETH is no longer a security and doesn't have that threat hanging over it. But we've seen a similar thing to what happened with Bitcoin. When Bitcoin was approved for a spot ETF, we noticed that it came down quite substantially. Ethereum's come down a bit, just 11%, but it could go down lower. So we have to prepare for this eventuality. That doesn't mean it's going to come down. It just means that we must just psychologically prep ourselves. If we can't get over this resistance, we've got a couple of resistance levels to get through. We're not going to go bullish. Not at least, not yet. Just a little over the start of July, it is anticipated the spot Ethereum ETFs will begin trading. That's where we would experience these massive breakouts in price. Of course, you need to prepare for the fact that it could happen before that particular date. In the short term, there's bearish price momentum inside the crypto industry. That's nothing to be concerned about whatsoever. This is in fact a fantastic buying opportunity, but you must always be prepared for all of that volatility. Inside a bull market run, you will get repeated drawdowns in excess of 20%, some 30% and some 40%. This is in a bull run. You must psychologically prepare yourself for these kind of drawdowns because what follows afterwards are some very healthy returns. And in order to get those returns, you either want to be borsogging or dollar cost averaging in, but do so with knowledge. Ethereum is definitely the story on everybody's mind. Now let's have a look into ETH's CTKS structure. CTKS structure goes across all of price history. It marks it all up with the most statistically significant support and resistance levels available. What I'm going to do is to just throw on shaded areas around these particular levels. They're called SCs. I want to make it just a little bit easier for you to see how price interacts with structural levels. We can see recently that we were coming up to that 3650 level and we were getting rejected. There were just far too many sellers. When we look at this 3560 level, we can see that we just cut through it, came down and found structural support around that 3485. We're just in the process of seeking if we're going to turn around or if we're going to retest. But what I want to do here is to zoom out a little and just explain why there are so many sellers up here at the current time from a CTKS structural perspective, and CTKS just means all of price history. The current problem that Ethereum has, this is just the price action that we were looking at. I wanted to zoom out and show you all of this structural overhead resistance, and you notice this particular area got cut through. If you're a member of the service, you already know that these areas of structural resistance are nothing to be trifled with. They're intense selling levels. And because we flipped them from support into resistance, ETH has been under pressure. And each time it comes up to these structural levels, and CTKS levels mean all of price history. They are literally the most statistically significant support and resistance levels available. And they're getting rejected. With the SEC dropping the Ethereum lawsuit, we were expecting a bit of a rally, but a sustained rally through this structural resistance level. We didn't get even up to that point. Now, what are we seeing right now? The sellers have entered the market and they're shorting the living daylights out of crypto. By doing your cheat sheet, especially row 1 and row 2, you'll understand what's behind this particular problem. The thing to bear in mind, until structural reasons turn around, we've got negative price momentum inside the market. That could change at any time, so you must be just very aware of how price can turn around. If we get cutovers, we're assuming that we're going to get to the next level of structural resistance. But if we've got cut unders, we can potentially move to lower levels of structural support. Beware of slicing a structural level like this. It doesn't bode well when it's to the downside. We want a confirmation around structural levels. If we get a cut through, we anticipate touching the structural level below. And we see this all the time. It's important to just keep an eye on Bitcoin's directional momentum because it drags the alts with it all the time. So just be aware that Bitcoin's gravitational pull will play out directly on Ethereum and every other alt. In order to understand where the crypto market is going and what happened to Ethereum, we can see that the 67,000 and 66,846 levels of structural resistance, this just means that the sellers are hanging out here. It didn't even have a shot of getting above it or getting to it. And we can see that it came over the 66,117 mark. What did it do? It came up, came back and failed on the retest, then failed on the retest of the 65,322 mark. At the moment, Bitcoin is under negative pressure and momentum. This is not something to be concerned about whatsoever. Having a great buying opportunity is not something to be trifled with. Remember that price just moves from structural level to structural level and back again. And that's what it does. That's the whole process of price. All you need to know is where the structural levels are so you can figure out where it's going to next. So we have in play the 65,322 and the 64,168 mark. As we're getting a bit of a cut under in price, the 64,168 mark is looking more probable. And when we do the cheat sheet, we can see a lot is going on, especially inside row 1 and row 2. Bitcoin is currently trading a little under 65,000. The key is to know where your structural levels are, and here we're looking at total crypto market cap, and also knowing how strong they are. If they fail to confirm as support, they're going down to lower structural safety nets, and we can see for total crypto market cap, there's been a lot of selling pressure right across the crypto space. When you look for a potential turnaround, you're looking for something like this. We need to get positive momentum, just confirming structural levels. And if we get that, we're off to the races. Please let me know in the comments, what do you think will happen? Do you think total crypto market cap will make levels down structurally? Or will we retest this and gain support and therefore bullish momentum? Knowing where your structural levels are is absolutely vitally important. because it will allow you to understand where price is going or where price is failing and how big or small or strong or weak support and resistance levels actually are. It's really good to put a note in the comments as to what you anticipate. It will provide a bit of a learning guide for you, and that's what the markets are all about. They pay you for your learning. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.